Bloomberg News.
Marc Faber, publisher of the Gloom, Boom, and Doom Report, joins us from Singapore. Marc, and you heard us talking about MUFJ's situation. Now, George Soros, of course, the billionaire investor, he said that U.S. financials basically bankrupt. And you said earlier this year in September that a total breakdown of the financial system is coming. So what about right now when you hear banks such as MUFJ raising huge amounts, like $11 billion worth? I guess, does that make you change your mind in terms of how bad things right now are still in the financial system?
Well, basically, the banks are probably bankrupt, but if the governments give the money free of charge, and they can charge still relatively high interest rates on their lending books, they obviously can be nurtured to some kind of a health. And I think, and I said it before, that actually financial stocks, and especially now that the bank index in Japan is approaching the March lows, that bank stocks worldwide still have some upside potential.
Okay, so there's still some financials worth buying into. Where are they? Are they here in the Asia Pac?
Well, first of all, in Asia, the banks are relatively sound. If you look at Singapore banks, at Thai banks, Indonesian banks, they have little exposure to toxic assets. So, in principle, they are reasonably attractive as an investment destination. Having said that, they already went up a lot. A lot of banks have almost doubled in price, so they're less attractive than they were, say, in March. But as in compared to Western banks, they're quite attractive.
Okay, well, you got to name names here, Marc. Any banks that you actually put money into?
Well, I own OCBC and UOB in Singapore, and Bangkok Bank and Siam Commercial Bank in Thailand, and Hang Seng Bank in Hong Kong.
All right, well, we see that name a lot throughout the city. So, Marc, it's interesting that you buy into these bank stocks, even though you said that there's a total breakdown of the financial system coming. Is that still true? Does that prediction still hold at this point?
Yes, this time, in this crisis, the banking sector went bankrupt. The next time it happens, the governments will go bankrupt, notably the U.S., but before that happens, the U.S. government, under the money printer, Mr. Bernanke, they'll print and print and print. So it may last quite some time. It could be 5 years, 10 years until the final breakdown comes. But I have no doubt that in this crisis, nothing has been solved at all. In fact, it's made worse because the private sector is acting rationally. They're deleveraging. And the government is leveraging up. The government's debts are rising very rapidly everywhere in the world, but of course in particular in the US. And when interest rates will have to go up, and eventually they'll go up, then the interest payments on the government debt will become extremely burdensome. I have seen studies which say that in 7 years' time, 30% of US tax revenues will be used to pay the interest on the government debt. I think it will happen in 5 years, and will be 50% of tax revenues will be used to pay the interest on the government debt. And at that stage, there is only one way out. It's to monetize continuously and monetize more and more and more. That will be the end, essentially.
Okay, so we have 5 to 10 years then before the total breakdown of the financial system.
You will be still alive. I'm not sure I'll be alive. But
oh, come on, Marc. You never know. You look like you're in good health. So, Marc, in the meantime, since we have 5 years left as an investor, let's be practical here, shall we? You know, you said that stocks back in September peaked back then. What about now? Because we've seen stock markets go higher from here and there. But going forward, do you see stock markets even going further from here on? Because we do have all this money printing taking place.
Well, I think the markets have been correcting in an unusual way, in the sense that the indices have kind of gone up. But obviously the big gains were essentially March 6th to about August, and since then the market has still traded up a little bit, but not that much, and many stocks have been correcting. But I would still buy gold mining shares. I would own gold, And as I pointed out before, the wheat price reached a 200 years low recently. And I think the agricultural commodities have lagged the increase in other commodity prices, notably the industrial commodities.
We're going to get to commercial break, unfortunately, Mark. So, Mark, before we went to commercial break, you're talking about your interest in mining. What about BHP? Because we heard Marius Kloppers there. He says he's a bit cautious, at least in the short to medium term. What do you think?
I think it's very realistic. I think short to medium term, the global economy has stabilized, but considering the huge stimulus that has been implemented by governments, and at the same time the huge monetary easing or quantitative easing that has taken place, so far the economies are basically disappointing. And the problem will arise when the stimulus is withdrawn, which I don't believe will happen. I think in the US they'll have another stimulus package and more deficits and more money printing and so forth. But I agree with Mr. Kloppers that in the longer term, the demand for commodities from China and India, the rest of Asia and the whole world will not vanish. It will keep on rising. And what is important to understand, we had a bear market in commodities 1980 to 2001. Then we had a bull market 2001 to 2008. And then a total crash in 2008 when the CRB index was cut in half. The point is, there was never really a supply response, because when the supply response was supposed to start to kick in 2008, the financing dried out and the prices collapsed. So actually, not much new capacity is coming on, and in many commodities the supply is going down, not up, and the reserves are going down, like for gold and for oil and so forth. So I think that actually prices could be eventually much, much higher. And don't forget, as long as you have a money printer at the Federal Reserve, all prices will eventually go up, but especially those prices where you're dealing with a material whose supply you cannot increase at the same rate as paper money.